Okay, Ericons video on Tuesday, the 10th of May 2022. It's just gone 11:04 p.m. Chicago time. Do hope you are doing well. So, this video is going to be about the Big Short, taken profits and reversed and gone long, and I'm going to explain what I'm seeing on my charts and why I've made that decision. But before getting on to the charts, just to say we're in Australia, having been away for, I think it was 982 days with the lockout and everything. So, I've got to tell you, I'm a little bit freaked out because I'm totally switched around the time zone now, having been so used to being in Hawaii, where we're kind of the last people to get up in the day. In Australia, we're kind of the first people to get up, us and the New Zealanders. And so it's actually Wednesday, the 11th of May, 2 p.m. in the afternoon when I'm recording this. And so just getting used to that time zone change is a little bit kind of freaky. I have to say, I think Hawaii has the best trading times of the year. In Hawaii, I'll be getting up at like 4:30, 5 o'clock in the morning to trade, look at the charts, and then be done by 10:30, 11 in the morning, and then can go surfing, spend the rest of the day in the sun, all those good things. In Europe, you're kind of trading in the afternoon, starting about 3 p.m. in the afternoon, and it kind of interferes with dinner. And then in Australia has to be the worst because you're starting trading at midnight and kind of going through till 4 in the morning. And the problem with that, it's very tough on your body, but the other thing is like you just want to go to bed, and so you kind of want your trades to be over, and you kind of search for trades in order to go to bed. So it's not a good kind of frame of mind to be in. But anyway, those are the breaks. We're back in Australia, and Australia is fine. I've had a lot of kind of emails, people saying how the Australian government kind of went over the top and locked down and whatever. But when you get back to Australia, everything is so normal, and it just seems like back to life as if nothing ever happened. And coming from the North Shore of Kauai to a relatively big city, Sydney, oh my God, the traffic seems insane, the number of people seems insane, the just life going on is at a different level. So it's kind of interesting to kind of get used to that. No videos from me for 10 days. We've just been kind of swamped with personal admin, but we're getting on top of that. So let's talk about some charts. Let's talk about why I've closed out this trade. So this was the Big Short on the Emini. Short 44.8650 on Sunday the 10th of April, and I closed this out. I actually closed it out on Sunday night into Monday at 4,052 and a quarter. So I didn't kind of catch the last 50 points or so of the last day and a half of this move, but not bad for me to hold a trade for almost an entire month. 434 points, so I've got to be happy with that. It could go lower. I think it's going to go lower, but I'm going to show you why I've decided to take profits and also reverse on this trade. So this was the day we were short, and I was talking about an initial target of 4,000, and that's actually where I've gone long at 4,000, and actually I've not written it down, 4,001 and a quarter, I think. So I was thinking that would be a good kind of point to get an initial target, and I was hoping it would go to this level kind of down here the last time that we had professionals on a down bar. And we've not seen on this particular overbought oversold kind of chart, we've not seen an oversold situation where the background turns to red. We have blue professional down bars, some more kind of exhaustion patterns, but there are some things that have got me kind of concerned, and I'll show you that on my charts to show you the reason why I'm kind of getting out and looking for a bounce for the next few days. So let's look at the typical setup of the better indicators with the two charts kind of side by side. This gives us the most kind of granularity where we can kind of drill into what the professionals are doing and what the cycles are doing. On the right hand side, we have everything to do with price. This is all based on beta sine wave. This plate of spaghetti behind below the price bars is showing the cyclical calculations in 3 different time frames, and that allows us to plot these cyclical support and resistance levels on the prices themselves. Thick lines for the highest time frames, little thin lines for the lowest time frames. On the left hand side we have everything to do with volume. We've got better momentum below the price bars. That's a volume based momentum rather than a price based momentum calculation. And on the price bars themselves we've got better Pro-Am, which uses the average trade size to identify professional and amateur activity. Amateurs are painted in yellow, professionals painted in blue. So this is what's kind of getting me kind of concerned on all the charts. It's to do with the cyclical activity. We are coming to an exhaustion point in terms of the trending activity, kind of running out of steam on the way down. So you'll tend to see trends play out, pull back to end of trend on the lower time frames. On the higher time frames you'll tend to see cyclical areas of support. And you can see here on better sine wave that we've got two levels kind of coming together here. On the intermediate time frame we've got a cross, so we're looking for support on the intermediate time frame, and that looks like an overshoot. We've overshot support on the lowest time frame and we are caught by the next highest time frame when that comes in. It's also going to be a cyclical cross at some point soonish on the highest time frame when these two lines cross. When the thick fast line, the red line, kind of crosses above the blue line, we're looking for cyclical support. And we've always said on this chart, on the daily chart of the E-mini, that this has got to run pullback to end of trend. We broke into this massive uptrend when we got above resistance at 35.25 here, and now what we've done after we maxed out with pullback to end of trends on the lowest time frame, followed by pullback to end of trend on the intermediate time frame, that gives us this area of resistance we can't punch through. We come down and we find support for a pullback to end of trend on the highest time frame. So this is kind of, we're kind of beginning of May, middle of May. We're kind of putting in this support here, which will be another kind of push back up to test into the highs and maybe get people kind of surprised. And this might run for, again, another kind of month or more on the upside, which might then put us in for some kind of major move September, October potentially, or some kind of culmination of some kind of move there. Anyway, that's that for me is important. This pullback to end of trend, we always knew we had to do that because we've gone past shot past our resistance on the highest time frame by so much. We have to put in the pullback to end of trend move on this time frame. So that's what's kind of coming together here. And then when you back it down, you start to see all of these moves starting to reach an end of trend kind of scenario. So we go down factor of 3, so the 3 135-minute bars in a daily chart. Here you can start to see we've got a pullback to end of trend on the lowest time frame, syncing up with cyclical support on the highest time frame. That's kind of due here. We've also got blue professional bars coming at those lows. No exhaustion patterns at this point. Because we've not seen exhaustion patterns kind of running out of steam, what we'll potentially do is then kind of break into a short covering rally where we kind of force all of the short players out and we get an exhaustion pattern before then maybe coming down and putting in that exhaustion finally kind of exhaustion sell. We got the move going with this exhaustion sell going down, blue dot there at this point here. We've got to see a similar type reading to end this, but before we do that we could go through a nasty kind of short covering rally and get an exhaustion buy pattern before then kind of coming down and properly testing into that low. So, but this is what's getting me kind of concerned. It's the pullback to end of trend on the lowest time frame that's due to be syncing up with cyclical support on the on the highest time frame on the 135-minute chart. Backing it down again, 45-minute chart. There are 3 45-minute bars in a 135-minute chart, and then here you can see we had pullback to end of trend on the lowest time frame, pullback to end of trend on the intermediate time frame. That gives us a left shoulder kind of down here. Again, we've kind of run out of steam in terms of momentum. We didn't get an exhaustion sell down here. There are actually no professional bars kind of down here, but that's an area where we could get a bounce back up and then kind of cause a short covering rally, and then going down again another factor of 3 for the next lowest time frame down to the 15-minute chart. Here you can see the pullback to end of trend kind of gone off on the highest time frame on the 15-minute chart here. Again, the readings are kind of neutral in terms of better momentum. We haven't got an exhaustion sell down here, but because of all those cyclical patterns kind of coming together, it's showing that downtrending move has kind of exhausted itself. I could be early by a couple of cycles here on the 15-minute chart. We might have to go resistance to support on the 15-minute chart, but Then going down another time frame to the 13,500 tick bar charts. Again, roughly speaking, 1/3 of the 15-minute chart. At this stage, we can start using tick bar charts. So I'm often asked, it's like, when do we use tick bar charts? When do you use time-based charts? What I found with the E-mini is about 13,500 ticks is the maximum that you can usefully or practically use a chart, because anything above that, the pull on the data and the calculations just slows down the chart. Opening it up becomes problematic, and if you have a computer that's maybe kind of not spec'd as highly spec'd as you might want, it could crash, your TradeStation or your NinjaTrade or whatever. So I find about 13,500, that's the limit for tick bar charts, and on the E-mini that is roughly speaking a third. It's about a 5-minute chart, maybe a 4-minute chart, something like that. So if I do back it down to the 13,500, you've got this nice little pattern kind of going on here. So let me show you this on whoops, come on, open up. Here we go. This is the last kind of move down that we've had over the last several days. We maxed out at 4,300. Blue professional bars at the high here with an exhaustion buy bearish divergence pattern, and then we break through the trailing stop into a nice little downtrending move. We get an exhaustion sell pattern here, and we bounce from there, but you can see that bounce is amateur up bars, so amateurs getting wrong-footed at that stage. Then the blue professional bars kind of come in again at 4,100, and they just knock this thing down really heavily. And I think so as a result of that, around here, this is where I was getting out on the Sunday night into Monday, early Monday morning at 52 around this level here, and we did come back down. I couldn't do it. I couldn't hold when I saw that activity on the lower time frames charts. Just couldn't hold. So but then the blue professional bars coming right at the lows, kind of down here. I'm not sure what that level is. Let's have a look at that. 61.75. So blue professional bars kind of come here. We force it into a short covering rally with an exhaustion buy pattern there. We've not seen exhaustion sell. The reads were pretty good. This was a pretty good reading kind of down here, but this is what's interesting to me. During today's activity, or Tuesday's activity, the low here was a Rambo pattern. So everybody was saying, finally, after a month of the market selling off, everybody's at this point, a month later, everybody's saying, oh my God, this thing is going to collapse. It's like, no, that's led by the amateurs. A Rambo pattern is a potential reversal of an amateur breakdown. So the amateurs are driving that move down, and they get wrong-footed. And what we have here is a classic kind of head and shoulders pattern. You got a left shoulder being made here, a head being made here, and a right shoulder being made here. So at the end of the day, we have professionals kind of come in. The professionals buying that low, that first kind of left shoulder. The amateurs getting wrong-footed at the head of the move down here, and then the next move down, the amateurs are a little bit too early, kind of chasing or maybe getting stopped out at this point here. We come back down to test into those lows, and the professionals come in and pick it up. So that gives us a nice kind of support area around this 85 level, 39.85, as a nice kind of support area. We're getting a bounce at the moment into the kind of early hours. That needs to hold. I've got my stop 25 points away from entry, so it's 75-ish, and I'm kind of happy with that. But let's see, if I get this right, this will be the bounce on this level here, and we'll go to a short covering rally, and it'll be, a pretty, I don't know, explosive, but something that'll generate some nice kind of activity to the upside. So that is the reasoning for exiting, reversing, going long at this point. I still think we're looking, the last video I put out talked about exhaustion patterns on the way down, and blue professional bars kind of coming in on the way down, maybe on the 45-minute chart kind of down here, seeing an exhaustion sell pattern to mirror this one down here. I think we still kind of might get that, but I'm just concerned with all these end of trends kind of gone off that we're going to get a little bit of a bounce, and I think it's worth a play to see where that bounce might go. So there we go. That is the big short, which was a month-long trade. That's a first for me, so pretty happy with that. Another few charts just to show you, just to see some of the things that started to turn around. Dollar index has been a a heck of a kind of run to the upside. This is the overbought oversold chart kind of setup, simplified a little bit, but as usual I add complexity by saying let's look at 2 time frames side by side, 1/3 apart. So the 300 minute on the lowest time frame and the the 300 tick bar chart on the lowest time frame and the 900 tick bar chart on the highest time frame. And just wait for this. We're kind of played out a little bit to the upside. We've got exhaustion buy on the dollar index. We've got blue professional bars at the highs. We are overbought on better sine wave here with the grey backgrounds. So breaking below this 103.42 level would take us into a downtrending move. On the lower time frame, the 500 tip bar chart, we had a signal a few days ago where it's starting to weaken. We're just kind of testing up and testing up. So let's see if we get background kind of printed with grays here on the 300 tip bar chart, and this kind of moves around. It's been a classic, kind of move up dollar index, and it's destroyed everything else. It's kind of destroyed all the cryptocurrencies. All of the commodities have come off a little bit because of the real strength that we had in the dollar index, and those are kind of inversely related to the dollar index. So if we get a little bit of reversal in the dollar index, we could get that with some strength in equities, bit of a risk on with people moving into I don't know, Japanese yen and euro and British pound. Of all of those currency, the British pound is the one that's looking like it's ready to pop on the upside. Let me show you. This is the 2250 tip bar chart here. We've got exhaustion sell, bullish divergence, blue professional bars kind of coming at the lows, and oversold with the red background here. We just need to pop above 2358 here, and that'll give us a triple signal on the British pound. Again, the signal on the lower time frame chart came in a little bit earlier, and then we've kind of come back down since then. So British pound could be ready for a little bit of a pop. We've got the 10-year that's already popped. So here, using a 3,000 and a 9,000 tick chart, we had a nice little triple signal here. We pushed a little bit further into those lows, but then we've had another triple signal on this chart here. And when I was looking at this a few minutes ago, that was a strong bar there, where it was getting above the blue professional bars at that point. So that's a little bit of a shame. I was hoping that that would maybe kind of come around and break through 119 and a bit. So it's in an uptrend at least. So let's see if kind of the 10 years rally with an equity rally. And then the cryptos, which, wow, I mean, I couldn't believe they got down to 30,000 on Bitcoin. Unbelievable. But we've had some signals in the last day. So on the lowest time frame tip bar chart, triple signals kind of go off here. On the highest time frame tip bar chart, let me show you this one here. So exhaustion sell, bullish divergence. We've run out of puff and a little flush pattern on the downside, flushing out the last of the sellers. So we run out of puff here. We're oversold on better sine wave. Been oversold a long time on better sine wave here with the red background, and then we bust above the trailing stop placed on the blue professional bars. We come back in for a little. This is a bouncing ball kind of signal down here, and this 3,300 level is kind of holding. So we need to get above this little high here, this breakout high into the 33s, to show that we've got strength there. And Ethereum is showing a similar type of pattern. We had the signal here on the lowest time frame, 4,500 here. This level down here was 2250. Blue professional bars anxiously buying it up at that point. We've come back in just to test with exhaustion sell, bullish divergence. So again, getting above this kind of congestion zone here to 2,500 or so would be good. Anyway, so there we go, a little rip around the charts, and hopefully I'll be able to post another video maybe this weekend or Monday. A lot going on. Anyway, so I hope your trading is going well, and looking forward to the next couple of days.